The Hedgeless Horseman here, it's May 16th, 2023. A day is a very entertaining day. And a very good anecdote, I think, how or what typically happens, psychologically at during bear markets or corrections or whatever you want to call it. Now, I've talked about this a bunch of times before, that pain is a function of time and paper losses, meaning that people are more inclined to sell and less inclined to buy if you're still at the same price, but let's say 2 additional months have passed, or 3 or 4 or 5 or 6, without the real upturn having started yet. So if the price of a company was kind of the same or at X 5 months ago, and it's at, even if it's up, even if it's X plus 20% or so, if you have more disappointments then price-wise, because most people want to always be making money, they always want to see green in the portfolio. That's what they think they need to have good returns, for the portfolio to always go up. Pain goes exponential. And today I've seen a lot of crying, really. I mean, the funny thing is, yes, sure, gold and silver have done well over the last, well, I guess couple of months at least. I mean, gold went to 2016, now it's at slightly below 2000. Silver went up to what, $26, and the low from 52 lows might have been, well, I don't know, I'm guessing like $17-18, something like that. But we haven't had a big lift in valuations of juniors, and now people are getting fed up again because the metals have been going, and I talked about this in a recent video, that the metals have been heading higher, but the juniors haven't really headed higher. So while the metals are starting the, again, inevitable correction, because no rally lasts forever, no correction lasts forever. So every additional day gold goes up, we know that it's one day closer to the next down cycle. That's just how it is. It's inevitable. That's how markets work. But it's, yes, from a sense, it's frustrating, of course, that juniors haven't really gone up to a higher level before the metals turned over. And this is pissing people off, immense amount of whining today, which is interesting. It's like not that much has changed, I would say. Well, yeah, not much has changed, especially if you're a value investor. It's like, what's the price of the junior? Whatever. What's the value of the junior? Well, if it's an above average quality junior, it's probably a lot higher than where it is. So it's like there's no problem there. It's like in an easy buy. It's just, if price goes down today, an even better buy. I mean, it's literally as simple as that for a value investor. But I'm seeing, let's say anonymous trolls coming out in the woodworks. I mean, what was interesting, and I think I touched on this last video, TSXV volumes are lowest since 2005. Since every trade has a buyer and seller, it means, I mean, by definition, a buyer has never been more contrarian than 2005. And we know, I mean, 2005, I bet miners were really cheap, because, I mean, we know what happened the years after that. They ramped up to 2008, I think, then crashed and ramped up to 2011. And gold price bottomed in around 2000s. Like here, this guy has, been kind of trolling most of the day. It's like, you're a freak. You're losing money with every of your mining company, or you get paid from them. And I just, yeah, pretty much. But I bet you can figure out how to make money. I mean, obviously, I don't remember last time I see this guy say anything. It's like, this is obviously one of those guys who's like, if something goes well, I doubt you'll see anything from him. But and of course, like, when people lash out, trolls, haters, whatever, it's a reflection of how they feel. So it's no surprise that this guy is getting emotional on a day like this. He's He's not sure what to do, obviously, because he has obviously not watched enough of my videos to just have a firm grasp of the obvious, that no sector goes down forever and no sector goes up forever, and no price of metal goes up forever or down forever. We're simply in the sucky period of the junior mining sector, which is approximately 80% of the time. So if you're not used to, or you can't cope with seeing a lot of paper losses, etc., then you're in the wrong sector. If you can cope with that and actually take advantage of it, you can make a lot of money. So it's like, yeah, you're losing money with meaning that, okay, price is going down, so you're losing money. It's like on paper. And of course, he's using that as, I don't know, shaming tactic, basically. It's like, you're losing money. It's like, I've never said that I've shown you countless times that I've had, this is my fourth big correction in junior miners, where my tradable portfolio or portfolio overall typically goes down something like 50% or more. My first correction in 2015, minus 54% in my portfolio in 4 or 5 months. And yeah, I'm not ashamed at all. I have many paper losses. Now the median company is probably down, I don't know, 50% from 52-week highs, if I had to guess. Just comes with the territory. But of course, if you can't stand that, if you're like, if you're, I don't know, ashamed of it, because it seems that many are ashamed, because people get trolled, etc. Oh, you were in this company which went south, etc. So what typically ends up happening, people don't have the conviction or the confidence to stay the course, to believe that they are right buying cheap. And even if it goes cheaper for months or years, they can't stand that. They can't stand looking wrong for an extended period of time, because they don't trust themselves, they have no real strategy, have no real conviction. So to most people, having paper losses at all is like, they believe that shouldn't happen if you have a good strategy, or that you're always supposed to have an uptrend in your portfolio. That's how you make any money. I mean, that's total bullshit, especially in this sector. 80% of the time, this sector sucks over the last at least a decade or so. And then, of course, I'm assuming it's like that I should, kill moi. But just, I mean, he has no chance. This guy has no chance. You can immediately tell which people have any sort of chance of not getting killed in this sector. And the ones who are not killed, given that it's so volatile, means that the opportunities are much more extreme. You can make more money in the mining sector than you can in a less volatile sector. It's just that it's much harder psychologically, because you will have more volatility, more price pain. And of course, quicker price gains as well. So anytime you see someone whining right now, for example, about prices being so low, I mean, when they are so low, it means the sector is incredibly, incredibly cheap, and the future expected returns are going higher. So the opportunities get exponentially better the lower this sector goes. So if you see someone like this, that's like very emotional, lash out at people, it's like, he has no chance. It's like, on that note, this guy, that's pretty funny. Interesting. So out of your 60 plus sponsors holdings on your website, how large percentage do you consider legit and honest? How many do you see as lifestyle companies with highly questionable managements? First of all, it's not 60, obviously, and I hope none. And then the response is, think and hope. You should be ashamed of yourself, and more importantly, people must be warned. Inexperienced, clueless retail, trust and follow your advice. You have huge responsibility, and clearly you have little to no empathy towards your followers. Yeah, that's why I'm making, I don't know, a video every 2-3 days or something, just talking about investing, and typically not even highlighting a specific company, but just trying to share some obvious common sense that's like working for me. And of course, the easiest way to call out a bullshitter is, if I'm so wrong, my advice is so poor. It's like, yeah, if I'm so wrong, you must have much better long-term results than me, because I quote, think and hope. Can you share your stellar results? I'm not sitting on the edge of my seat waiting for him to show his great long-term results. No, of course, he has absolutely no clue. And the most ironic thing is, like, look at this guy's username. From 100k to 100 million, from zero to becoming a multimillionaire, a true story. What the hell does that mean? If that's not irony, I don't know what is. True story. I mean, Jesus, this guy is like brain dead. Talk about throwing stones in glass houses. 3 followers, so it's like nobody cares because he's complaining about other people's advice, but obviously it's not too many people that follow his advice, which is weird, because becoming a multimillionaire, a true story, one would think that, if it's that great. No. And of course, I don't expect to have him post his long-term results or anything like that, because anybody can lose money or make money in the short term. I would say it's like, I don't know, 10 years. I mean, ideally 10 years would be a good, I guess, minimum to show that. At least 5 years to show. It's like, do you have an acceptable strategy, let's say? Because there was an endless amount of people that made huge money, millions of dollars in crypto for a while. I mean, for a couple of years, actually. So just looking at that, like, wow, they are superb investors. You know, you see 19-year-olds buying a Lamborghini. It's like, yeah, you must be super great. Why is that? Well, they made a lot of money in the last 2 years or whatever. I like to see their portfolio returns 10 years from now, 20 years from now. And I said that at the time because, as you know, it's like I haven't touched crypto. I thought it was a huge bubble. I didn't catch any of the run-up, and I didn't catch any of the crashes, obviously. But it's like, it's worth it to... I mean, if you were a part of the greatest bubble in history, and you got out in time, I mean, great. You might be... Who knows how long it might be before you see a bubble of those epic proportions. But that's not a strategy you can really bank on. It's like, yeah, I'll come back in 40 years when we have a bubble as big as that. I mean, that's not a strategy. It's like you make money once every, 4 decades or so. If you just put in the time learning about investing, a strategy which is replicable, which you can use for the rest of your life, even though Dogecoin longs or Shiba longs or whatever, let's say they made 2,000%. That's it. Probably that's probably it. When that bubble burst, they don't have a strategy. They have no idea what, how to actually invest. They might be good at momentum trading, the biggest bubble ever, but when that ship has sailed, they have no strategy. And anyone who starts off like, no, I'm going to put in my time and effort in actually, we know the mining sector is going to be around, and we know it crashes and goes up and crashes and goes up. So, I mean, if you just learn how to invest in any sector, really, you're going to do very well over the long term and don't need to wait for a bubble that happens every 40, 50 years or whatever. So it's like, yeah, sure, it would be nice to have caught all the ups in the crypto bubble and made, excuse me, 2,000% or whatever, but I'm not phased about it. I knew it. I mean, over the long term, that's going to go to, most of them are going to go to zero, and I have no idea when that's going to start. In the meantime, if nobody cares about value investing or commodities, etc., I mean, Dogecoin reached 70 billion market cap. That's more than all the juniors in the world combined. So if that can find that much dumb money, it means that this sector can on the flip side of the coin, this could be so generationally cheap, which I think it is, especially given not only given where the metals are trading, etc., or the value of the projects, but just from a long-term demand supply picture. No, but it's just interesting. It's like, I have no doubts whatsoever. I could probably cut my long-term returns by at least half, maybe up to 70-80%, and I think I would still beat this guy. It's like think and hope. It's like, do I know exactly how do you explicitly say this is a lifestyle company or this is not a lifestyle company? That's very hard. I don't think I own any lifestyle companies. Do I know that for sure? No. Have I owned some? Yes. But it's like, one point about this sector. First of all, this is the old, periods of time I look wrong, which is, most of the time, let's say. The thing is, that's like, we are here now, using Bear Creek as a proxy. We've gone from here to here. The recent past is absolutely abysmal. Worst since, well, this period. So I mean that's just how it is. And of course, excuse me. Of course, what was I gonna say? Oh yeah. There are think about it like this, and my discussion with that troll was like, yeah, on a long-term basis, most companies will not amount to much, and most juniors, I would guess, one could consider to be lifestyle companies. But the thing is that even if maybe given how, excuse me, given how high the rewards can be in a success story. I mean, take, Snowline Gold up like, I don't know, 10 bagged or something like that in a year or year and a half, and there's other success stories obviously, but point is that if one story can pull off such good returns over, a few years, etc. I mean, I don't know what your hit rate need to be. Down here, not a lot, because everything is cheap. I mean, the cheaper this sector gets, when price goes down, there are more future 10-baggers created every day as price declines. Some company that we don't know right now, but will one day trade at $5. Let's say it goes down from I don't know, 60 cents to 50 cents today. All of a sudden that became a future 10-bagger. Price goes down, expected future returns go up. That's how this sector. The prices were the lowest here and the future returns were the highest here. Lowest here since then, very high return. Lowest since here, extreme returns. From this level I expect extreme returns. From this level I also expect extreme returns. The point being that if there is a low success rate to start off with, and you don't need to have a high. I mean, people who like, oh, he bought this stock and that went south, that didn't become much, but it's like, duh. If we're talking about high risk, high expiration stories, I mean, I own a bunch of companies which I think have 5, 10, 20 bag potential, but that's going to take a few years. Obviously, you don't need every single story to become a 5, 10 or 20 bagger to make money. And second of all, it's going to take years for that to even play out. So the big winners are not going to be big winners in a month. It's going to take years of them being a big winner. A success story, let's say that grows for the next 3 years. If I hold that for 3 years, let's say I don't sell a single share, then that could pay for, who knows, 10, 15 other juniors that went to zero. And twice as many that got cut in half by 50%. So you don't need a really high hit rate, especially from these levels. And so not only is a big success a rarity, but if you're invested in this sector during this period of time, there's almost going to be no juniors where you're going to be up a lot in. There are juniors out there which have done incredible work, increased their intrinsic value by multiples, and still the price is not that much higher. Maybe even lower, or maybe a bit higher, but like maybe not by much. Maybe they're 50% higher, but should be like 200% higher. So it's like if you take this period, you should not even expect to be. I mean, if you're only down, I mean, I don't know what is exactly, let's see here. From the top, if you just look at portfolio over this period of time, yeah, minus 85%. If you're just down, I don't know, 60% or whatever, I mean, you're basically outperforming the median junior. If you're down 50%, that's not going to be a problem at all when this sector turns around. I mean, why do I say that? Because it never is. I mean, these rallies are like, I mean, this rally here, 239%, 400%, 700%. And from this level, I mean, I'm expecting, huge returns to the next sentiment high. But the point is like, you're losing money in, well, who's the guy here? You're losing money with it's like, yeah, I'm not really surprised. That's typically how it goes. When I started off, if I can remember, every single stock I owned was down. And obviously the average was down 54%. Was that a problem? No, I made a ton of money later on. I made it all back and then some. So it's like if you're like me, if you're a value investor and you're always long, you're gonna have huge paper drawdowns, like every other year at least. I mean, this period here was like, I don't know, I mean, from here it's 73%, and not long after that another 73%. Just enormous swings. And why can I afford enormous swings? Because I'm always I've been fully invested from this bottom here, fully invested from this bottom here, fully invested from this bottom here, because I don't market time. If I can, let's say you just had Bear Creek Mining. If I did nothing but buy Bear Creek Mining here, didn't do another buy, regardless of how low it was, etc., I would be down 36%. And I bet I would be outperforming most people who started buying here, because most would have sold back here, bought back up here, sold down here, bought back, panic sold here, bought back, panic sold. I mean, most people would have a much worse result, especially if you factor in, transaction costs, etc. And the funny thing is, like, many juniors today, okay, if we take just Bear Creek is obviously higher than it was in October of last year. But like I started off by saying, pain is a function of time and price. This hasn't really gone anywhere since this point in time. I don't remember exactly. I mean, this was a pretty nasty, downward momentum, so maybe there was more whining or whatever. But it's like, if you just look at here from here, there's much more whining now than it was just 3 months ago. Why? Because time has passed. More time of disappointments, quote. For a value investor, obviously this means, oh, Jesus, 3 more months of buying at these ridiculous levels. I mean, if you had money to spare, would you want this sector to go like this or this? You would have more in your portfolio if you had 3 months more of being able to buy at this price, because the any additional buy would theoretically net you 500%. So your returns will be better, but nobody agrees with that. That's why people are getting pissed off. Nobody that is whining now understands how you make money in this sector. Have you ever seen, excuse me, the Lundins or Ross Beatty or whatever, whining about being able to pick up projects cheap? How does the Lundins make so much money? Because they are famous for picking up assets that nobody seemed to want at the ridiculous prices. But but to most people that is not what happens in reality. I mean, the thing is that, and I don't think I actually posted that tweet, but it's like, in theory, everybody has heard about the buy low, sell high. Everybody constantly says that. The funny thing is, like, buy low, sell high. They might get themselves to buy here, down here. They're typically they end up, not following that because it's lower. In reality, what everybody has heard, the buy low, sell high. My way of going about it is buy cheap and sell when it's not so cheap, or I find something cheaper. So I never know when a low is in. I thought the sector was obnoxiously cheap here. That didn't stop it from going lower, or getting cheaper. So buying cheap does not mean that you bought the exact bottom. The only time catching this knife over many months, the only buy that would not be in the red would be the exact day of the bottom, which nobody knows when that arrives. And it doesn't matter. If your average was here, you made a killing anyway. And if you bought all the way down, every additional buy boosted your future portfolio returns. So you made more money by simply just constantly averaging down. You want to buy as low and cheap as possible. The lower it stays, the longer you can buy, the more you're gonna make. That's how it is. But of course, nobody, the ones that are trolling me, they don't beat the market. That's why it's so, why it's like, okay, if my way of going about it is so wrong, you must have much better long-term results than me, by definition. But nobody ever posts a chart or can prove in any way, shape, or form that they actually have superb results. So it's like, why would I listen to input from somebody who has no idea, probably have abysmal returns, and you could give him 10 years investing period, he would probably underperform the market. That advice is worth 0. And this is one interesting. It's like returns of juniors in the 1979 to 1980 mania. I hope you can see, I can't zoom in. So this is over 1 year, basically. It's like, here's one that went up 13,000%, 3,000%. That's what I mean about, the rallies are typically so extreme. And this obviously was before that. This doesn't go back to 1980. But still, it's like, just this move here. This, of course, had a crash that was pretty much even quicker. But it's like, this is almost 200%, and that's like a month. This was January. 6 months. 652%. 450% over 4 months. This is what juniors can do over a period of only like a year. And of course this, from the low here, Bear Creek went up like 2,000%. How much precision do you need? Do you need to get in at the exact low, which nobody can? Obviously not. Like I've shown before, if you put up a trading bot or whatever, it's like, take a trading sardine like this. Okay, anytime it goes below this trend line here, you just buy every month. Your average will go down and down and down and down. And maybe down here you have an average here, and you'll make to the next top 277%. we're in deep buying territory. And the longer we stay and the better the buys, the more we'll bitch. And it's like, one point it's like, oh, your company's, you're losing money. It's like, this is Philo Mining, Lundin play. Just over this period here, this is from 2020, so not that long ago. Lundin play went down 62.5%. I bet a lot of people were bitching about that then. It went down to 8 Swedish crowns. Today it's at 174. And during that period of time, it's had many, a few at least, long and relatively deep corrections. Well, this wasn't at deep, 80 to, 50, 55. Well, okay, from the top it's more than -16. Still, it's like you can sit on some of the best future performers ever, or even the current performers, and they will still have huge drawdowns when the sentiment swings to the downside. So the question is, okay, it's like, were you stupid since you sat in Philo Mining and it went down 60%, whatever? Nope. It's like sentiment rules. This is Newfound Gold. High sentiment in Newfound Gold. Okay, was front-running value creation. I mean, here, for example, they had a discovery hole, and I think they kind of kept on hitting, but sentiment was good. Sentiment was real good. I mean, this is September 2020. Sentiment overall in juniors were much better. Let's see, sentiment. Yeah, I mean, it was around the peak when that started off this rally, and of course it went lower, but this was still not a disastrous sentiment. This is abysmal sentiment. So what happens? Like, people were more greedy than fearful. Now, when we're at extreme sentiment lows, people are more fearful than greedy. So my guess is that the intrinsic value of Newfound Gold is now higher than price. And of course, one could say that, yes, since a growth stock is supposed to price in, I mean, now this looks like too high of a price, etc. But we don't exactly know how the value has turned out. But it's like one could say that, yeah, but from this time point here, I mean, if you bought it at 9 and it's at, I don't know, let's say 12 or something now, you still bought cheap today relative to the price like 2 years later. And it's not absolutely huge returns, but it's like still pretty good returns. I mean, if you knew that, hey, I think value is going to go like this, so even if I buy here, price is going to converge one day with value, and who knows, maybe Newfound Gold within a year is going to be trading at, I don't know, $14. All of a sudden, it's like almost every buy was in the money, and it's like, on that point, it's like depending on what time frame this stock both sucked and was greatest ever. The junior market is a silly place. This is Great Bear. When everything is said and done, people highlight Great Bear as the best thing since sliced bread. I mean, a huge success story. What do you think people were saying over this period here to here? It's like basically gone nowhere for months. Or from this period down here, or from this long ass period here. If you just look at this period, you would say, Jesus, Great Bear sucks. If you looked at this period from here, Great Bear sucks. If you looked at this period to here, Great Bear sucks. Here to here, it sucks. And if you look at the actual, when the big moves revaluation happened, it was like between here and here, then between here and here, and then between here and here. Even in a huge success story like Great Bear, most of the time, majority of the time, in one of the now known best success stories everybody talks about now, and the ones who bought it's like brag about buying it. It's like if you just hodl this, it took years for it to become a 10 to 20 bagger. And in any time period, or oh, excuse me. I need some water. At face value, you can still see that, like, the big revaluations, like this was, except for this. I mean, these two were the big revaluations, and then this jump here. Otherwise, like, this is months of real not going anywhere. Months of real not going anywhere. Many months. I mean, this is like July. So this is more than a year of not going anywhere. So even in a success story, there's more pain than gain, time-wise. And my point is also showing, I mean, what the juniors can do, and as we can see in Bear Creek, the rallies tend to be highly concentrated, but most of the time, this sector sucks ass. By sucking ass, I mean that the opportunities are way too good for way too long, meaning a saggy, price development. So the very thing that makes this sector so frustrating and hard psychologically to invest in is also why it's one of the absolute easiest sectors to beat. Like, again, Pierre Lassonde. If you say this sector is so hard, you're getting shamed by Pierre Lassonde because he's suggesting that this is one of the easiest sectors to be invested in, for the simple reason that this sector crashes and then rallies enormously, and it will keep on doing that probably as long as there's a mining sector. So why is this sector easy right now? Because it's so cheap, and you can throw darts. And if you hit a bunch of at least above quality juniors, you're probably going to make a lot of money one day in them. That's what makes it easy. But obviously almost nobody can actually buy and do nothing for months or years and wait until the mean reversion happens. So they're whining now. They are whining now. The ones that are whining the most are probably the ones that bought here, because then they saw people making money in it, and of course myself, it's like, I'm bullish all the time. I've been long 100% of the time. I cannot afford to only be bullish on juniors I think are cheap or might be cheap, etc. up here, and not be bullish here. That I cannot afford. I cannot afford to sell low if I'm buying high. If I buy low and extremely low, and even more so the lower it goes, I can afford to buy high. That's just how it is. So think about that. It's like you can look at almost any success story. They typically go down a few moves minus 50%. I mean, Great Bear had minus 60% moves, minus 50%. Quite a few minus 30%. Like to quote Adam Lundin, a lot of people say the trend is your friend, but the trend means, you are too late. You got to be there early, start early, and definitely go against the grain. If you were started buying this sector here, or started here, or bought all the way up, you were obviously, early in that sense. I actually was early here, but I just kept buying. The trend was absolutely not my friend, and I just kept buying. Hindsight, very happy I did so. Same here. I bought all the way down when the trend was here. The trend is maximum point, not your friend. Trend is longest it's ever been from here, and the deepest correction has ever been. So when the trend is absolutely not your trend, that's when the best buys happen. Or again, you could do because now I see on Twitter people saying that they have, like always happens, gold miners etc. go down, and they have a lot. They start posting downside targets, and that's also what I mean about the fact that in theory people say buy low, sell high. In practice, it almost always ends up being sell low because it can always go lower, and buy high because it can always go lower. Because up here, people were posting upside targets. Down here, people are posting downside targets. Today, I don't think I've seen many people say, oh, you should catch falling knives today. Oh, you're going to make a lot of money one day. No, everybody's trying to guess what's going to happen in the near future. Nobody ever, if it looks like the price might go down, nobody wants to be in. If it looks like price is probably going to continue higher, everybody wants to go in. Everybody wants to go in here because the trend is up. Nobody wants to buy here because the trend is down. That's like, it's almost fun to, people get pissed off if you're still bullish right now. But according to my strategy, now is some of the worst time to sell there's ever been. Nothing to do with what the charts say or anything like that. Valuations and a sentiment proxy like this. Because the thing is that if you're not willing, first of all, you never know. It's like here, for example, people say, I'll just buy in when the trend is my friend. Why wasn't the trend your friend here? The thing that's the interesting part. I mean, think about this. You have a 100% move, which to me at the time looked like, hey, this looks like, in hindsight, after 100% move, it looks like this was the bottom. So, and I've showed this before. Okay, let's say you didn't catch the falling knife, but now you're like, wait, I think this is the bottom, so now the trend is up. Well, minus 40% within, well, a short time period, unless you had stops, etc. So maybe you got stopped out. Well, I have no idea where you stopped out. Maybe 23% or whatever. Did you buy back here because now this looked like this was the bottom? I don't know when you would have gonna stopped out, but you would be down 42%. And if you weren't sure that this was the bottom after it had ripped 100%, maybe I'm not convinced yet. I wanted to get above, who knows, some level, because you're not convinced this was the bottom yet. Let's say this continued, hit that, went above whatever level you had to, like, yeah, now for sure the trend is your friend. Even if you're right, you might be looking at a 65% return if you hold it to like the next sentiment high. That's if you're right. If you're wrong, boom, you could sit on an 82% loss. Where do we go from here? The sector is not going to go to zero, that we know. Any junior can go to zero, whatever. But it's like these are extreme lows already. Let's say the downside is, who knows? Let's say we double tag. That's 37. That's the short-term paper risk for the juniors. Let's say it's that. The upside risk is until the next sentiment high, maybe 490%. So again, if you do not buy here because, well, the trend is down, it looks like it can go lower, aka like everybody does. I'm not buying now. Sell low because it can always go lower, aka don't buy low because it can always go lower. If you're right and it goes here, when are you going to buy back in? Because now it looks like it's going to go even lower. How did anyone, I shouldn't say most, but I know, technical service, let's say people, they sold here because now it had broken this. So it's like the opposite of calling a bottom. They sold here. They didn't buy here. That's typically what happens, I would say. Nobody predicted that this was the bottom. Absolutely nobody. So my thing is that okay, if I'm not buying here because I fear they might go lower, if I'm right, and obviously I'm market timing, being greedy, in my opinion, if it goes down here, okay, what if you don't buy that because you think it's going to go lower and then it starts to head up? When are you going to buy back in? Let's say, okay, I'm going to buy back when this trend is broken out or whatever. Then it's pretty much the exact same price as here. If you were just a value investor, you would actually have bought a bit more perhaps and lowered yours. So you'll make more money anyway, instead of just trying to be cute now and trade. And if you're wrong, you won't get a better buying opportunity like this. Because if the prices start to go something like this, and obviously it would go something like yada yada, whatever, you didn't buy the best opportunity for maybe the next 3-4 years. So you were willing to risk very high future returns because you were unwilling to risk to sit at a higher paper loss. Whereas the value investor who wasn't that greedy, and if it actually went lower, he would just buy more, and at the end, even if he topped out by 0.5% over this period of time, his future returns would be even higher. His portfolio, he would make even more. I cannot afford to not buy this low if I'm gonna be able to afford buying high as well. Nobody knew that this was the bottom. Why didn't it go down here? So if you didn't buy because you thought it would go down, within, I don't know, a month, you missed out on 100% rally, and let's say you bought back then and you made 130. Whereas somebody who just bought all the way down, much higher returns from those buys. It makes absolutely no sense from a game theory perspective to be, in my opinion, to be picking. That is greed to me. But of course nobody agrees with me pretty much. That's why I'm getting trolled, and there's not too many people. I mean, there are a few people who like actually get this and like, yeah, I'm cool about it. I'm buying every month. I mean, I know they're going to make a lot more money than the ones that are whining and trolling right now. That's just how it is. Because by definition, okay, if you have let's say you have a very solid strategy, you have a simple strategy which requires a lot of internal fortitude and patience, you can rule out 95% of people. They will not see it your way. They will not agree with me. If everybody agreed with me, something would be wrong, because I wouldn't be a contrarian, let's say. We would never have gone this low if everybody agreed with me. If everybody in the junior space, like as soon as it, I don't know, hit this level here and went lower, or yes, as soon as it hits this, oh yeah, now I'm super greedy. No, then we wouldn't have gone down here. I mean, it's pretty basic stuff, but that's the irony, and that's why typically the trolls, it's like, well, if I'm wrong, then you must have better returns than me, and they never have. Well, no one has posted, at least so far. I have a very, very, very simple strategy, and that includes looking very wrong for a long period of time, now and then, which happens quite often in this sector. And again, if you're just looking over this period, you're not going to be sitting on big paper profits in maybe any junior yawn. But that doesn't mean that, which I've shown from examples of my portfolio, that within a couple of years perhaps, you might be in the green on almost every one of the stocks that you're currently in the red. And again, since opportunities change all the time, we've had many months now where you could buy dirt cheap. I'm adding to my ownership in juniors every chance I get. Every chance I get, because I know I cannot afford to not buy when juniors get this low. I cannot afford not to buy that because the future expected returns are so high. And the cheaper to get, the more I'm going to make. And in the meantime, you can, again, like I talked about, value shuffling. Excuse me. You see a junior put out great results or great news. You think that, hey, I think the company was worth $1. It's trading for $50. After the news, I think the company is worth $1.5, and the share price doesn't move. All of a sudden, that went from 100% opportunity to a 200% opportunity. The opportunity in that stock, thanks to price not moving, went up significantly. So then you can increase your future returns by selling some other stock and buying that one. Where selling a stock where you think still that that it's 100% upside in that one, risk adjusted, but I'm selling it to buy something where that money has a 200% upside. So even though, let's say you sold a stock that you're down 50% in, and I know it's hard to, because everybody hates selling at a loss, but it makes no sense to still sit in a stock that's down 50%. So you're taking a 50% loss, but it makes all the sense in the world to buy something else where you think that you'll make twice as much money, risk adjusted, on average. Makes all the sense in the world, because you're boosting your future portfolio returns, even though at the moment absolutely nothing happens with the price / value of your portfolio. But in 2 years, your portfolio might have gone from X to instead of X to 2X, it might have gone from X to 2.5X, simply because you reshuffled. You understood, hey, this opportunity got even better. There are no buyers right now. Nobody is caring about this. That is perfect. I'm buying even more upside for the same price. So it's not a time. It's not just stick your hand in the sand and just oh. But that's the thing. It's like you have, like I said before, you have selling, holding, buying. Buying goes up exponentially. But given the volatility and the abysmal sentiment, we know that positive news does not get rewarded. Negative news might get overly punished. So it means you have lack of volatility to the upside, which means opportunities are created if a company puts out great results, which increases the value and price doesn't go anywhere. You can also have, let's say, a subpar or even negative news release, but the price goes down too much. Let's say a company has 3 good looking projects and one project fails to deliver and it gets slammed. You might be picking up the other 2 projects which will be tested or worked, etc., for absolutely ridiculous levels. So again, even if you have, let's say you have a 2% position in a stock at price X. Something happens. Either good news comes and nothing happens, so your 2% position is still a 2% position, or let's say it gets cut in half because there's a subpar, something disappoints the market, so you know how 1% position. But all of a sudden, if the case is that good news was out, maybe you should increase your position size by 100%. Maybe it's worth 4%. Maybe you should have 4% of your portfolio in that one. That's gonna, assuming things go well, on average, if you play that scenario out endless amount of times and you were right, you're gonna make even more money. And flip side, let's say 2% position gets cut in half to 1%, but now it was overly punished, so it's way too cheap. So the actual risk reward is even better now after the negative news because price went down so much. So before that you had a 2% position. Maybe you should jack it up from 1 to 4%, or 1 to at least 2% again. All of that has implications of your long-term portfolio returns. Taking advantage of the psychology that is rampant. And right now that is a depressed sentiment, meaning that favorable outcomes don't get the recognition in the price, and negative news, etc., get overly recognized. Those are emotions at play and sentiment at play that is creating opportunities for anyone who can forego the emotional thing. There are huge, like I said, anytime now that juniors go lower, every day from here, maybe today one stock you owned, maybe it's down 8%. And maybe that means that you didn't lose anything, but now all of a sudden that share price from the new lower level will return a 10-bagger in the future instead of a 9-bagger. That's 100% added future return. Just incredible. 100%. If you can get 100% in 3 years, that is good enough. If you go from 900 to 1000% in 3 years, that's superb. Well, it's already superb, but it's just more extreme. So it's like, if you feel like whining, that people whine and people bellyache, that is coming from a sense of loss of control. Because it should be beyond obvious that a cheap sector for longer, or a cheaper sector, is an opportunity by definition. And you can see that in any mining chart, any trading sardine, or the 100-year mining index. The deeper the correction goes, the more you make if you average down. So it should not be, you should not be sitting here being bullish yesterday, then prices fall today and you all of a sudden don't know what to do. Or you start whining, etc. Then you have no idea how you actually make money. You have no idea what Pierre Lassonde is saying when he is saying this is the easiest sector. If you thought a company was cheap yesterday, a gold junior, and gold is down 1%, 1.5%, and that junior is down, 6%, much more than the gold price, and obviously we know that won't be a mine in 5-10 years, so it doesn't matter really what the gold price is today anyway. You should just immediately know that that's just an even better buy. That's all that changed. Price went down more than value, even better buy. You shouldn't be whining and complaining about this sector, because that means you have that's you're admitting that you have no idea how a cyclical sector works. You have no idea that the higher it goes, the more it will fall. The lower it goes, the higher it will go later on. This is how this sector works. Up, down, for all eternity. And the lower you buy, the more that buy is gonna give you. Yeah, I hope this is, enough copium. And some of the stories, I think Magna is absolutely ridiculously cheap. So it's what's the problem there? My only problem is I don't have more money to put in, really. There's at least, I think, 10 that are ridiculous no-brainers, where I could, if I had more liquidity and maybe a smaller portfolio, I could have own 3 stocks or something. Because I think they're so obnoxiously cheap. And if any one of those 3 works, which I think have a pretty good chance of working, they will more than pay them for the other 2, even if they went to 0. But there's so many. And of course, when the tide comes in, even if, like I also talked about before, you don't need to be, you don't need perfection. I doubt I own any of the juniors that will be the absolute best performers going from, looking from today to whenever the next sentiment high is. I doubt that. That's a slim chance. It's probably going to be some junior that's trading for, I don't know, 5 cents today, and might be trading at, I don't know, $3 in, whenever this sentiment high. I don't need that. I just need to have high exposure long from very low levels. And if a few of my companies do great, that's super. If the company fundamentals are okay, just from the sentiment swing alone, they'll, because like I said, Bear Creek Mining hasn't really changed this much from this point to here. Still price just, absolutely, well, even higher than that actually. Went down 90%, then up 700%, then down 77%, and then up 378%, etc. With no real change. Value didn't really change. It was just greed and fear changed. Once greed kicks in, no price is too high. Once fear sets in, no price is too low. Until sooner or later, every trend stops, rolls over. The higher it has gone, the more punished it will get. So that's all we know. Every additional up day in that uptrend gets it one day closer to it rolling over and going down. And any additional down day brings it closer to the next leg up. That is all we know. If this wasn't the bottom, it might be the bottom. We'll know that in maybe a few months or a year from now or whatever. If that wasn't the bottom, we know that every additional down day in this sector, the bottom is getting closer and the future returns are going higher. And the trolling and crying, etc., is going to go up exponentially from here on out. People can suffer this correction from here. That's just a month or so, and it's like not a big deal. Now, after this amount of time and this kind of paper losses, any additional disappointment, meaning that, I can't believe I can buy juniors this cheap with this high future return still, it's going up exponentially. You can tell. It's just the last 2-3 trading days. All of a sudden, I'm seeing anonymous trolls and belly achers, etc. That is how it's supposed to be. A bottom is supposed to be bottomless, feel bottomless. So when it feels absolutely hopeless that this will never turn around, you're getting one day closer to the bottom, maybe a multi-year bottom. I know exactly what I need to do because I have a firm grasp of common sense that this will turn around, go up, not this, I don't know what is going to happen to Bear Creek, but the sector overall. And I also have the understanding that if you just look at the valuations of some juniors out there, it is absolutely, they are extremely undervalued. It makes absolutely no sense. It's beyond obvious that they are cheap, and that's my main goal. I want to always preferably, I want to only own juniors where I can see huge upside when price to value closes, or that value will go up a lot and price is going to follow one day. Your portfolio should always have the best ahead, because obviously up here, if your portfolio is here, it's like, maybe most of your juniors are overvalued or close to overvalued. So it's like they might get more overvalued before they turn around, but this glass is gonna go from almost full to almost empty one day. And now the opposite is obviously here. That yes, from this level, where is it? Well, here is the level. We might go in even lower, but that doesn't matter. It just means that it's gonna turn from an even lower point and head higher one day. Thanks for listening. If I mention any companies, assume I am biased, assume I own them, assume I and sponsored by them. Assume everything. I don't share your losses or your profits. This is what I'm doing. And you can do like everyone else if you want to, if that makes sense to you. This makes total sense to me. And thankfully, so far, it has proven to been very profitable as well. Even though it's like contrary to what some people think, that that you need to sit at every position needs to be in the green, and it's like I've shown you a bunch of times. I've shown my huge drawdowns, like 50%, 54% here. This was around 52%, I think, maybe 50%, 50%, in the median stock. Doesn't matter. I mean, it's like I can afford the huge drawdowns because I'm gonna be. I don't know when this bottom is in. Maybe this was the bottom, but I was 100% long from here then. And whatever price level is gonna be the bottom, I'm gonna be 100% long. And the like I've shown, from the last day of the downtrend, the returns can be absolutely crazy. Thanks for listening. Not investing advice. Bye bye.